I'm Don Aparo, a co-founder and CTO at RedSwan. Again, glad to have you all here today. So we're going to move on to the next panel. We're going to give Kyle a break from being MC, and he's going to become a moderator. And we're going to hear from some of our core strategic partners, the folks that are really helping us make all this happen behind the scenes. So Kyle, over to you.
All right. Hopefully everybody's not sick of hearing my voice at this point. But if you are, you got to get used to it because you got another couple hours of me. If I could request some of our strapping young bucks to help me with one more chair, because we're going to have one extra panelist here. But I was to call up my panelists on stage. As Don mentioned, we have some of the sponsors of the event today and some of the industry pioneers and trailblazers. I think it's a really exciting conversation because for a sponsor or an asset issuer, when we're talking about the blockchain, it can be a little bit intimidating because of the fact that there are a lot of these types of solutions on the market. And I think there's a huge opportunity to discuss what interoperability looks like in this market. So I think we're going to have a really fun conversation here. I don't know if we have some microphones. Make sure that those work. As I mentioned, my name is Kyle Sonlin. I work in the industry. I've been in the industry for a decade. I focus a lot on capital markets activities, specifically with central bank digital currencies, stablecoins, and in the commodities sector, gold, oil, a variety of these projects. Previously, I built a company called Security Token Market, which was a data company building a $25 billion private market index focused on real estate, debt, and equity products that are tokenized. So I've built relationships with RedSwan and many of these providers over the years, but it's not about me today. It's about my fantastic panel. So I'm going to start here with Rick. If you want to introduce yourself, and then we can go down the line, make sure the microphones work, and get into a fun conversation today.
All right. Thank you, Kyle. We're the Fantastic Four over here, so it's great to be up here. We're keeping it real tight. Well, look, it's awesome to be part of this beautiful opportunity to see this amazing skyline in front of us. Thank you, Ed, for inviting us. I was with Ed. Lauren and I were with Ed in Brazil for the Stellar Conference a couple of weeks ago, so it was awesome to kind of hear the blueprint from Ed talking about the Rivington and kind of the opportunity that was happening there. So it's super exciting to see this real world asset right in front of our eyes taking form, taking shape. So Rick Golubov with Franklin Templeton Digital Assets. I focus on our tokenization efforts with our Benji tech platform, Benji Token, and super excited to be here with my colleagues in the space. I have a lot of respect for everyone up here. So we're super pumped to be chatting with everyone.
Great. Well, hello, everyone. My name is Gregg Bell. I'm the Chief Business Officer at HBAR Inc., which is part of the Hedera Foundation. I want to congratulate the RedSwan team. It's absolutely exciting to be sitting here in an asset that has been tokenized in the center of Manhattan. And, being one of the pioneers in driving forward what was often viewed as sort of this intangible item out there, a digital asset, and to have a physical, real world asset here that people can point to as the example of an asset that is an asset class that is only just going to expand is incredible to see. So congratulations to the team for continuing to pioneer. Hedera is one of the platforms that is designed specifically for tokenization. We are a public protocol that is enterprise grade, highly scalable, and is run by Fortune 500 institutions geared specifically towards regulated markets. And so I think we'll talk a little bit more about this today, but as you've seen in other panels earlier, the belief or misconception that regulated markets like real estate do not fit with tokenization models is entirely incorrect. You can meet the compliance needs, the risk needs, and we'll talk about many of the benefits here today. But it's a pleasure to be with you all.
Perfect. And I'll round out the introductions for the panel. And I know we'll have a great discussion on the blockchain compatibility for real world assets as well. But my name is Lauren Strasburg. I lead our real world asset and tokenization partnerships for the Stellar Development Foundation. And I get to work very closely with our asset management partners in Franklin Templeton with RedSwan, of course, Wisdom Tree, Ondo Finance being a crypto native asset manager as well. Just to talk a bit more about Stellar, starting on the foundation side, our foundation was formed in 2014. And whether it's through our enterprise fund, our community fund, our Stellar disbursement platform, what we aim to do is enable our ecosystem partners with integration grants as well as marketing grants. So folks can integrate on Stellar, build and deploy on Stellar, and also integrate with additional ecosystem partners. And one of my favorite parts of working for the foundation is that this model is not a set it and forget it model. I get to work long-term with Rick, long-term with Ed and team, Don as well, to develop a long-term go-to-market strategy with each and every one of our tokenization partners. Moving on to the network side of things, we were founded in 2014 as well, one of the oldest blockchains out there. We're a layer one, open source, public, permissionless, and we were very purposely built for payments, for DeFi, for real world asset tokenization, and then on the last note there, disbursement. So again, thanks for being here, and looking forward to the discussion.
So to summarize for the audience, we have three all-stars here with some wonderful perspectives. And so I want to kick it off from a high level. And in my experience in this industry, a question that no matter who you are, no matter what asset you're doing, you're working with, no matter what part of the industry you're in, there is a question of why tokenization? Why are we using blockchain if this stuff already exists today? There's similar products that are in the analog space. If there's Web 2 SaaS technologies that do some of these similar structures, why do we need to use tokenization aside from maybe the marketing hype or the lingo associated? So Rick, because you guys are pioneering as a sponsor in this space and sit in a seat where many of the individuals that are here in the room today or who are watching online, why tokenization? Why is it been a benefit for you guys now that you've done a variety of funds on chain?
Yeah, thanks, Kyle. So if you think about Franklin Templeton, we're in a really unique spot. We're a large asset manager. We have 1.7 trillion in AUM. We have every asset class under the sun from A to Z. We offer SMAs, funds, ETFs. So we cover the span of the globe of a little bit of everything for every type of investor. Why tokenization? Why digital assets? You know, we really started our journey going back to 2017, 2018. We're a 75 plus year old asset manager. And if you think about our business, you know, we started and our growth really came from mutual funds, right? So, and if you think of mutual funds, it's a system of ledgers, right? So to us, when we're thinking about disruption from our own kind of C-suite level experience of how could we look at blockchain, DLT to really disrupt our operations, it made perfect sense because blockchain's a ledger, mutual funds, it's a ledger. We just wanted to incorporate new ways of innovation within our own back office. So the idea of tokenizing to us, you know, really kind of had this aha moment, this light bulb of how could we make things cheaper, quicker, faster, more efficient from the old world and incorporate this new blockchain ecosystem that is really encapsulating everything that we see as the futurescapes of society. I see parallels between the rise of the internet. I see parallels with the rise of the ETF landscape 30 years ago. The parallels of how tokenization is really going to capitalize, take off the entire global financial and ecosystem, and everything that we do will be on chain eventually. Now, you're not going to snap your fingers. We're all going to be on chain. But this is the blueprint of why this is extremely important. And, you know, the things that Ed has done and his team have done with commercial real estate is super exciting. So from a Franklin Templeton perspective, we thought of this as a means of, can we do this? Can we work with the SEC to create this vision of a future of tokenizing a U.S. government money market fund and putting it on chain? Can we work with the SEC to basically change the whole utility spectrum of a U.S. government money market fund? You know, we've enabled things to create optionality. I heard Ed and Keith and Daryl talking about optionality throughout the conversation. That's what tokenization offers, is the ability to provide access, optionality, and to create a whole new way of doing things from our lens, an asset manager, to enhance the customer's experience profile. So I can go on and on, but I don't want to, keep on, talking about some of these use cases. I want to let some of my partners talk about why blockchain is important as well.
I started my career as an asset-backed investment banker and a mortgage trader. And I've often viewed tokenization through the lens of securitization, or the evolution of securitization. And so, when you think about where we are today, we've got this one asset here that's incredible, that's been tokenized. I believe that there will be catalysts that will eventually be a place where we look around and all the buildings around us are represented in a token format. And it's really on the innovators like RedSwan to demonstrate to the market the why. Now, from a protocol perspective, markets that are global, markets that remove many of the barriers to access for investments, is an incredible value proposition to be able to embed greater liquidity, optionality into a variety of products, be they money market funds or other fixed income products like real estate. And then if you can do that and demonstrate it at a cheaper, faster manner that still meets the regulatory compliance of a market, then I think you'll see greater and greater adoption. And that's where Hedera has really been focused. The structure of the network, which is run by institutions like Google and IBM and Dell and investment banks like Nomura and Shinhan Bank and corporates, we've really leaned into ensuring that there is the regulatory compliance for financial markets. So you're not, through tokenizing, concerned with OFAC violations or other nefarious KYC violations that are often perceived with the early stages of cryptocurrencies. There's absolute maturation of this industry in terms of the technology stacks. You see fixed fees and other components that make it able to be adopted by institutions and CFOs that are budgeting for their products. And you see the power of global networks.
Yeah, so, I want to double tap on that if I can. I think there's a lot of opportunity to kind of qualify the opportunities that the technology provides. But at the end of the day, for a financial firm, we must also quantify the opportunities and the benefits that are provided by some of these technical solutions. So you mentioned some of the compliance enforcement, like from the clients that you're working with, whether it's Aberdeen, whether it's a variety of other funds and firms that you've worked with. Where do you see the main driver is for them to scale this? Is it reducing the cost of enforcing some of the red tape, as you mentioned? Is it enhanced distribution in markets? Where do you see the real benefit from the clients that you're actively working with, as opposed to just some of the theoretical ones? Where's the actual sauce?
Well, there are certain things that just have to be in place in order for the engagement, and those are there. That is the binary yes or no. Then it's what is the net new revenue or true value to an institution? And often that comes in the form of the either access to a broader market, access to liquidity, or the transferability of these investments. And so when you talk about money market funds, and Aberdeen as an example, they are actively utilizing tokenized money market funds on an institutional basis. And you could just as easily see other fixed income products enabled in the same format to meet margin calls for corporate relationships. So they have an FX trading book where they face Lloyd's Bank. On a regular basis, they are settling margin between the two for their FX exposure. And they're maintaining their investments in tokenized products rather than having to revert back to fiat to meet margin calls. So it's a great example where you have institutions that are coming and saying, I have a real problem here. I'm able to address this by remaining more invested, generate the yield from that investment, and reducing counterparty credit risk. So the more that we have true institutional value and investor value, we're going to see more adoption of this technology.
Yeah, I think that's a great point. I remember reading somewhere that, Broadridge, which is now one of the largest repo lenders, is saving somewhere in the range of $1 million per 100,000 transactions just from using tokenization technology in managing a lot of this intraday counterparty or credit risk or liquidity management or margin, maintenance, all of these things. So I think what you're describing there makes a lot of sense. And kicking it over to you, Lauren, I don't know if you have any thoughts on that line of thinking, but I also have some other questions that we can get into as well.
Perfect. Yeah, no, I'd absolutely love to add on to that. I think going back to the initial question of like, why tokenize? Should we tokenize everything? What should we do with this tokenization? I think there are two really key takeaways. It's one, operational efficiency, and two, capital distribution. And I'd love to share some examples of that. In fact, to execute one single operation on Stellar's network, and you'll have to give your figures too, but a cost per operation is 0.00038 of a penny. So extremely operational efficient. Franklin Templeton actually did a study, a public study on if they were to put 50,000 transactions through their traditional rails, that would cost about $1 per transaction, so $50,000. But when putting those same 50,000 transactions through Stellar's network, that cost them only about $120. Huge gains there. So that has certainly allowed them to then pivot from these operational efficiency gains using blockchain technology into capital distribution. Rick, you'll have to talk about all the new jurisdictions that you've expanded into with GBenji and beyond. Just a few other examples as well. Wisdom Tree is a great partner of ours at Stellar as well. They've launched an institutional as well as retail platform. There are 14 SEC regulated 40 Act funds that they've issued on Stellar, and we're distributing through US wealth channels, international wealth channels. And I think the last example I'd love to give is certainly a RedSwan example. Since our public announcement, which was at our annual conference called Meridian, they have since tokenized more than $100 million of real estate on Stellar, actually 107 million to be exact. So, the operational efficiencies just really open up that opportunity to focus on capital distribution more.
And that's where opportunities in working with companies like RedSwan is tremendous because, you don't actually have to build all these applications yourself. Don and Ed and the team have built a lot of the mechanisms to do so that you can take advantage of the tremendous technical opportunities that are provided by Stellar, by Hedera, and by the blockchain industry. So I want to kick it back to Rick. We haven't heard a ton from you. Could you talk about the appetite for cash flowing, yield bearing products? Where is that coming from in this new market? Because, I think that, operational efficiencies are tremendous in reducing costs. But as you mentioned, a lot of the issuers are going to be considering how are they bringing in new capital into these products, or at the very least, how are they actually going to fundraise this initiative? If they're going to be adding all this new technology layers, who's going to be buying it? Can you talk about the appetite for the products that you've built thus far?
Yeah, absolutely. So maybe before we even talk about appetite, we talk about what we've built. Right? Franklin Templeton built our own wallet infrastructure. So we're a large asset manager. We built an entire tech stack. We created our own wallet infrastructure. We created our own digital transfer agent. That's also a huge piece of the puzzle. We're not running a digital twin or a legacy transfer agent in tandem. This is a pure transfer agent that's digital, that mints authentically on chain the way blockchain's meant to be. So these are all the things in place when you talk about appetite that you have to have first. So in order to get to a certain place, you have to build the infrastructure. We built the infrastructure. We launched to friends and family in 2021. And what Lauren was referencing, Franklin Templeton's a large asset manager. By request of the SEC, we created this retail app experience where you can buy our Benji token, which is a U.S. government money market fund that's tokenized on public blockchains. All the transactions records are kept on chain. There's obviously no PII out there or anything like that where you can see who owns what. But the beauty of using the blockchains is one of the reasons why we were able to achieve the opportunity set to run our own digital transfer agent without having anything in the background. The SEC,
super cool, by the way. Yeah. That alone is incredible.
Yeah, it's incredible. It's an amazing feat. Yeah, I know more and more tokenization platforms are finally at that point as well, but for a while we were the only one. But the unique thing about having that in place of showcasing to the SEC is like groundbreaking at the time. This was 2021. We started our journey in 2017. So different dynamic than what is happening right now since, the new landscape since January. The speed of how everything is fluid with everything the government has done to enhance the profile of digital assets, cryptocurrencies, etc. But I really want to hit home is that as a large asset manager, we saw the vision of the future very early on. And I always like to give credit to our CEO, Jenny Johnson. She was not the CEO when we embarked on this journey. She was running operations. So for her to see this point blank of seeing this front and center of these amazing efficiency gains, these areas of disruption of using blockchain in 2017, 2018, 2019, you have to give her tremendous kudos, which I don't think is really recognized 100%, because I don't think everyone knows the backstory of our journey, which I think is extremely important. But long story short, we created this tokenized U.S. government money market funds on chain. Why does it matter, right? We saw the efficiency gains. The SEC, saw that you don't have to subpoena transaction record anymore. You can just go on chain. They saw the amazing cost savings of running on Stellar. So these are all eye-popping, wide-opening experiences for the SEC to see, well, this is real. This is something that we need to really move forward with and understand. Why using blockchain is super cool in our eyes and how it revolutionizes and changes everything in terms of, we tokenize the U.S. government money market fund. So what, right? It's a Rule 2a-7. It's the most plain, it's the most conservative, vanilla money market fund strategy out there, but we think it's the most important. What we've done is we've enhanced the profile of a U.S. government money market fund to be not what I like to say our grandparents' money market funds anymore. We've created, through working in tandem with the SEC, the ability to send peer-to-peer transfers of this said tokenized U.S. government money market fund. So any Benji shareholder, wallet holder can send Benji tokens instantaneous on the retail app experience and then on the institutional app experience, which I did not discuss as well. We also created an institutional app where CFOs, heads of treasuries right now are using our token as a means of corporate treasury for crypto natives and non-crypto natives. So peer-to-peer transfers is one piece of the puzzle. We have the ability to offer a patent pending piece called intraday yield, which we think is a really big game changer for institutions sending Benji tokens back and forth from A to B to C to D throughout the day, 24 hours, 365, carving up your yield, right? When you send, yield matters tremendously in this day and age, especially for institutions. So this is why blockchain for us made perfect sense. And we have evolved significantly since the early days of 2017, 2018 to where we are now in this landscape. Even with the Fed cutting rates, you see the rise of the Genius Act, you see the rise of stablecoins. Stablecoins and U.S. government money market funds that are tokenized on chain will live in harmony together. It's not us versus them. It's more of how do we capture the upside from these amazing things that have been pushed forward in a relatively short time since January to really galvanize an entire globe that there's ways of liquidity with stablecoins, but there's also ways of using tokenized government money market funds to your advantage.
Yeah. I was just going to say, Franklin Templeton has been such a visionary, and congratulations. And one of the things that I love about sitting in the foundation seat is that we act as a partner. We are here to help. We're here to educate. We're here to amplify and accelerate the adoption of this technology. And I think that's shared by the industry as a whole. And when we can lean into where this technology, going back to the why, what you can do once an asset is tokenized that can't be done on legacy rails or in legacy infrastructure, that is extremely compelling. Things like the intraday, cash flows. So, today we've seen a couple of innovations that have occurred over the last several months on Hedera relate to the cash flows occurring on a second-by-second basis, to being able to facilitate yield in an entirely new way. And you look at the traditional fixed income products that pay on a quarterly basis or on a monthly basis, or even the the salaries that people get by quarterly. We stream data everywhere in our lives. Money is no different. And so being able to create cash flows that can go at a higher frequency is something that is enabled on high performance networks on blockchains that cannot be done on legacy rails. And so when we have some tools, specifically there are asset tokenization tools that enable the acceleration of the tokenization, that's where we love to partner with entrepreneurs.
And I just want to say one quick thing. Gregg makes a great point. Our initial stages of why we even decided to go down this path of tokenization and working with public blockchain partners like Stellar and working with Hedera potentially in the future, right, is because we wanted to see if the blockchain was efficient enough and fast enough for us. If you look at the money market fund construct, it pays monthly, quarterly, whatever it is. Our goal was to break it, to see if we could use blockchains to pay daily. We pay daily accrual, daily income to our investors. That's powerful in this term of it, in this day and age where liquidity is at a paramount. So we are airdropping or sending tokens every single day to users' wallets. So to us, that's why we decided to go down this path of blockchains and public blockchains. That was one of our most important criteria, to see if we could even do this, to see if the tech was fast enough, efficient enough, secure enough to enable us to create optionality for clients and doing things in a whole new way. So I just wanted to touch on that.
Yeah, and I think what we're all getting at here are like, what are these key ingredients to reach mass adoption and tokenization? And we all work on this together. I think one of those key ingredients is really integrations with legacy infrastructure. So, we've got to realize that these regulated, sophisticated, 75 plus year asset managers are not just going to rip out and replace their technology overnight. It's not going to happen in 1 year, might not even happen in 3 years. So to kind of Gregg's point on the foundation side, where we really lead with a consultative approach, we want to plan out these incremental integrations to allow these sophisticated institutions to run on blockchain. And then from kind of those integrations with legacy systems, then we get to talk about interoperability. The world is absolutely multi-chain. Franklin Templeton is on 9 chains right now. So together, like with the Hedera Foundation and other blockchains as well, we want to bridge these assets. We want to have Oracle data that flows smoothly because really, ultimately, you want these assets to have a very thorough life cycle on chain, regardless of where it's minted and regardless of where it ends up. But yeah, I think those are some of the key ingredients.
Well, to your point, it's not just the interoperability between if a real estate asset exists on one chain or another, but it's also the legacy systems. So enabling the fiat conversions and fiat cash flows to interact with tokenized securities is a key component to the adoption phase that we're in today.
So we do have a 10-minute period here allotted for Q&As. So if anybody has any questions, feel free to raise your hand. As a reminder, we do have our event after this, after 6 p.m. for networking. We're going upstairs, we're having hors d'oeuvres, we're having champagne, so you can sit down and chat with any of these amazing individuals as well and get some more detailed opportunities to dive into what you're working on. Does anybody have any questions that they would like to ask the panel?
Thank you for your insights. Two quick questions. One is shadow banking. Does this really make shadow banking now real, that we do not have to have really a bank account? We could just keep our money on effectively non-bank institutions and be able to buy things with and trade or whatever that may be. The second question is technical. Uniswap. Is that something, for secondary market making, which is really ultimately important, obviously. What are your thoughts on that? Is Uniswap something that you guys embrace?
Thank you. I'll take the first one. I appreciate the question. So, look, the banking infrastructure that we use right now, or Benji, the Benji token, as I mentioned, is this U.S. government money market fund. It is a security. They're available to U.S. investors. It's a 40 Act SEC registered digital asset security. We have a global Benji product, which is registered out of Luxembourg, available in 10 countries and up to 50 potential countries that clients can buy that in those regions. You have an iBenji, which is a registered BVI product that's being used as collateral and an exchange and a banking tri-party ecosystem that we just launched in Singapore for Mas Benji. So just want to paint the picture. Everyone that buys our token, these are securities, has to be KYC'd, AML. You have to integrate your bank account to be able to buy our token. Currently, we also offer a stablecoin rail for our US Benji product. It's not in terms of a shadow banking. We have our precise KYC elements of how you buy this token. And we work hand in hand with the banks. We're talking to a lot of interesting outfits that are using blockchain rails as well, and how to incorporate easier methods of moving away from Fed wires. How do we move away from a T+1, make it T+0 with our banking partners? And as I mentioned with the Genius Act, now all these banking partners are going to have stable coins on their balance sheet, offering stable coins as well. So I think it's also, everyone's catching up to speed exactly what this Genius Act means for the industry. And I think what it exactly means for these banks to participate in this digital asset ecosystem. I don't know if you, Lauren or Greg, want to touch upon how that incorporates with you guys.
Sure. And I'll kind of bridge this one into the second question, which I think is quite interesting because that is also a key ingredient to mass adoption, which is breaking down these liquidity silos, whether it's primary market or secondary market. And that's why when you evaluate blockchains, it's so important to take a look at who their ecosystem partners are, whether it's a centralized exchange, a decentralized exchange, who the wallet partners are and also kind of what KYC AML is built into the smart contracts of those wallets. Also, you want to think about, hey, are my assets, which are permissioned assets, are they going to enter permissionless DeFi? And how are we going to monitor that and make sure everything stays compliant no matter what jurisdiction you're in? In addition, kind of like on the ecosystem side as well, it is this emergence of secondary market platforms, both in the US and internationally, that want to, again, continue the life cycle of these tokenized assets. But I think there needs to be further work there and additional partners, whether it's Uniswap or other types of equivalents for swapping assets and moving assets across chains. I think that needs to be developed much further. But again, it kind of plays into like, what is it going to take to reach mass adoption?
Tokenized assets are fantastic collateral forms. They improve many of the transferability needs that are needed to facilitate margin type relationships. And so when it comes to the financing side, I don't think it's, that you're no longer going to see bank or non-bank type lenders, but there is definitely a new pool of capital that is coming into the mix. And that is what you see in many of these liquidity pools. They're yield-bearing pools of stablecoins or other investable assets that are seeking to lend against digital assets like real estate when they are tokenized in format. And so there is the availability for global capital to enter in what is termed today decentralized finance. And we're seeing more institutional avenues to plug into that meet the KYC and AML regulations to grow the pool of capital that is ultimately lending against these vehicles. But you need to have the assets tokenized, the collateral format first to facilitate those lending relationships. And that's where a lot of the securitization is sort of evolving in the decentralized finance space.
Well, if there's any other questions, keep your hands raised. In the meantime, I do have a question for honestly anybody on my panel that has any thoughts. But I was thinking, as Rick really mentioned, that the use case for a lot of their assets is kind of between institutional companies within that sector and a little bit less kind of retail targeted or outside of that sector targeted. And I don't want to put words in your mouth. The question I have for the panel is, as we kind of pivot this towards real estate, do we see it kind of accounting the same way in terms of different firms within the financial services and within the real estate sector will be transacting between each other and coordinating between each other using tokenization, or does tokenization kind of serve a bit more as a connection point between new potential buyers or new potential investors and the assets themselves? Which one of the two do we see being more likely if it was to be a binary option?
I'll take the first thing. I mean, we do have a retail app experience where clients can buy our token and through a retail interface. I won't, give you the whole, rundown on, all about us. But what's cool about it is you can send peer-to-peer transfers the same way you send other competitors, except you're giving yield. So when you're talking about democratization, this yield component, we're all very familiar with yield, but 99.9% of the whole entire globe don't know what 4% is, don't know what 3% is, don't know what 2% is. You get what I'm getting at. So the power of yield is extremely important in terms of how we can democratize the world, even in a rate cycle that's being cut through blockchain rails, right? I think that's very powerful. The power to send money peer-to-peer is powerful. I don't think people really understand that. The same way we send Zelle and Venmos every single day without blinking an eye, you're just sending dollars. You're not sending yield. So I think the ability that people conceptualize earning yield and sending yield to your friends and family instantaneous, not just institutions, but token on a retail level, is powerful. That's how we see the world changing. Then that's how we see, to kind of pivot into the next part of all this, is that how working with partners like RedSwan and how the ability to utilize tokenized U.S. government money market funds in their business as well could be powerful too for investors that are looking to allocate capital. Why not, as you're looking to peruse the investment menus of these amazing properties, you have dry powder. The dry powder is maybe sitting in a bank account. Why not have it sit within RedSwan and a tokenized government money market fund? And when we're ready to invest in the Rivington, you can move that money very easily into your RedSwan's platform. So we're not there yet. We're still working on things like that to be able to offer down the road. But I think that's the power of tokenization and tokenized U.S. government money market funds, to offer optionality and yield, instant yield.
I mean, optionality is absolutely the word. And when you look at some of the assets that are being tokenized here by RedSwan and the portfolios that will continue to be made available, there are more and more things that an investor can do with these assets. And that's going to be really exciting. I would say, going back to your question, I think it's the B2B plays that are really going to bring true scale to this industry. It's only just recently, outside of some of the true pioneers like RedSwan and Franklin Templeton, that have been able to operate within the United States, that large-scale institutions are finding the regulatory clearance to really engage. And that's a really exciting, pivotal moment, certainly in the US, where the scale of business is coming to these networks. And that's where we are today. So I think the real volumes, although historically they have been retail focused, will come when institutions begin to interact on these rails, seeking the benefits of the lower cost points, seeking the benefits of new access and transferability and collateralization.
And I think that's why we're so excited at Stellar to see RedSwan focusing on not just Reg S, but Reg D, and pushing for that Reg A plus. So internationally, when we're onboarding clients for the Reg S, there are very specific smart contract, indications. Is this person from a sanctioned country? Has this person met their escrow minimum? Like, all of each and every one of these operations is controlled through smart contracts, moving that investment process so very quickly. And then kind of to Rick's point as well about the on and off ramps, how are you beginning this investment? How are you closing out this investment? And maybe to even use Benji or use stable coins, whether it's a US denominated stable coin or a Euro denominated stable coin, just the way that money moves cross border into potential investments like this is just going to continue to change.
Well, we have about 30 seconds left in this panel, so I think everybody could take a second and scan that QR code, as you can see to the left side, to better understand the types of properties here And we're going to have an amazing conversation throughout the rest of the day, a few more panels, as well as we're going to have a wonderful reception later this evening. Make sure to hit up any of your colleagues that are in the area to come by, have a glass of champagne, and talk real estate over the next couple of hours. So thank you so much to my panel for being here and the wonderful audience. And that closes out our panel for today. Thank you very much.